Cisco has just released their fourth quarter earnings for 2022 and the full fiscal year earnings also. What we're going to be doing is looking at these numbers right now and then taking that to my discounted free cash flow model and Buffett Grimm intrinsic value model to see if this stock is a buy or a sell. Let's just quickly go to Yahoo Finance here. The market has liked what they've seen. It's gone from $46.66 to $48 a share, so up almost 3% after hours. If we compare this to the previous time they had earnings, they dropped massively, dropped about 15% over those 3 days, but we can see that the market has reacted pretty favorably to these earnings. Analysts were expecting a earnings per share of about 82 cents and revenue estimate was 12.78 billion. So let's have a look at these numbers and see what they've done. So overall, Cisco ended the fiscal year with quarter four revenue of 13.1 billion and the fiscal year revenue of 51. So that is up 3%. So they have beat analyst expectations, which is obviously why we can see the stock is up. So revenue 13, flat year over year, earnings per shares, GAAP and non-GAAP 68 cents to and 83 cents. Financial year of 2022 increase of 3% to 51.6 billion. Earnings per share $2.82, non-GAAP $3.36. We'll be talking about the guidance towards the end, but let's just get straight into the numbers here. Now, if we scroll down, we have the 3 months ended on the right for July 21, and then the most recent quarter, and we also have the full year estimates. So let's just talk about the revenue. We have products and sales on the quarter down from slightly over 9.7 billion to slightly under. Services about the same, but increased by about 4 million, 3.410 to 3.414. Overall in the quarter, that is down about 20 million, but as we saw at the start of the video, the full year is up 51.5 billion compared to 49.8. So that is up, revenue is up. Now we want to have a look at the profit. How do we get profit? Well, it's revenue minus cost of sales and everything. You can see the total cost of sales on the year is up, but we can see from the revenue it is up slightly, 10.5 billion to 11.8. Quarter is surprisingly down 3 billion to 2.8, but profit is up for the year. So once again, that is a big win, and that's why we can see that the market is liking it. Next, are Cisco buying back their shares? Yes, they are. 4.222 billion to 4.170 billion. Why do we care about this? Well, if you own one share of Cisco and there's 10 shares, you own 10% of that company. Cisco then buys back 5 of their shares. That would increase your stake in the company from 10% to 20% because there's less shares. And especially if we look at the share price of Cisco over the last few years, if they were buying back when it was low here, that was a great bit of business by them. Not so much recently, but if they keep doing buybacks, the share price is lower than it's been. So overall, that is a solid investment by Cisco. Next thing we want to look at is free cash flow. How do we get free cash flow? Cash from operating activities minus capital expenditures. And we have the full year here. So this is the full year, not the quarter. Where is it here? Sorry, net cash provided by operating activities. It is down slightly. This is 21 and 20, 21 on the right and 20, 15.4 to 13.2 billion. So that is the net cash provided by operating activities. And we do have the CapEx here, acquisitions of property and equipment, very low, Cisco, 692 million to 477. So overall, that gives us a free cash flow of around about, 12.7 billion, which is very nice. We'll just quickly go to my sheet here. And you can see that we have the previous cash flows. They are down. Let me just quickly take it to my summary sheet. We've got a quick summary here. P ratio 16.3, lower than the market. This is the current S&P market average at about 21.6. You can see we've been down quite substantially recently, but this is still lower than that. Revenue, as I said, this is in 2017, so it actually is a fail in that respect because it is relatively flat. Profit, pass, but once again flat. Buying back their shares. Free cash flow is down. So only 3 passes. Free cash flow ratio about 15, and the dividend, they pay about 6.3 billion a year in dividend. The dividend is 3.2%, so it is a safe dividend, half their free cash flow. And if you're interested in this, buy the shares before October 3rd and you will get paid that nice 3.2% dividend. So now let's take it to my discounted free cash flow cash flow model. We've calculated the future free cash flows, discounted them to today's value, and this is going to give us a calculated stock price for Cisco. Firstly, we're just going to be looking at averages, and then we'll see what that gives us a number here. I think it'll like the stock. Yes, it does. Discounted free cash flow models always love Cisco because of their large amounts of free cash flow. But this is with increasing free cash flow compared to the year. So let's just have a look at these averages here. I think revenue is about fair, as you can see here. They have been relatively flat. Net income margins, once again, that is a fair estimate. And the free cash flow to net income ratio this year was obviously a bit of a decrease, but I think the previous years are more examples. So I am pretty happy with that number in terms of the calculations. But $84 a share is much higher than Cisco has ever been. We go to the all-time highs. Even at the top of the dot-com bubble, Cisco was still not $80 a share. So I do think they are a little bit bullish on Cisco, is the discounted free cash flow model. But that's why I use two. I also use the Buffett-Graham intrinsic value model, earnings per share, expected growth rate, and AAA bond yield. If we just quickly go to Yahoo Finance, we can see that the expected growth rate from analysts is 6.47%. And the AAA bond yield, I also have this link here because this changes quite a bit. Yes, we can see it's dropped off, increased and then dropped again, but 4.06. So what does that give us in terms of fair value? $66 a share and a Graham price of 49, which is, if it's below that, then it's a buy and hold. It is a margin of safety of about 25%. So both of these models say it's a buy. What are analysts saying on this stock? Well, in 12 months on the high side, they're saying 70. On the low side 40, and average 50. So models are saying it's a buy, analysts are also saying it's a buy. So overall, is it a buy? Well, that's a question that hopefully I've answered for you today. If we just quickly go to the back to here, we can see that we do have some guidance. Quarter one guidance are expecting revenue growth of about 2 to 4%, and the full year guidance about 4 to 6% year over year. Now, if we just quickly go back to my sheet, analysts, let's say that they are correct, and we'll give them the benefit of the doubt of about 4%. We'll go on the high side, we'll go with 6. Now, this isn't, this is the 24-25 years. You can see that will put it up to about $93 a share. So I would say take the discounted free cash flow with a pinch of salt on this, because it is a very high free cash flow company. But overall, they do look pretty good. Let's just have a look and see what the market is saying about Cisco. Yep, still about 3%. And we can have a look at some technical analysis here. What's happened with the stock recently? Well, I've got some moving averages. The 50-day is green, 100-day is yellow, and 200-day is red. And we've had some bullish price movement in the short term. The price is going through the shortest major moving average and the 100-day. So the price is now past that point, and the next line before that would be 52. So I think in terms of momentum, Cisco is looking pretty good. And we'll just confirm that. We'll have a look at the MACD, moving average, convergence, divergence up. I've got my free trial. Please sponsor me, Trading View, but all you need to do is just remove one of those. We can get this back. So there you go, there's the MACD. And yes, they've had a pretty bullish momentum. As you can see here, this the MACD and signal line crossed back in May, and then they crossed the zero line back in July. So this would have been a great buying signal back here, and the momentum has been strong since then. And you can see it's definitely had room to grow in the past. So overall, technicals liking the stock, and the sort of financial statements are looking good as well. Right, guys, thanks for watching. Please give a like if you enjoyed the video, subscribe if you're not already, and I'll catch you guys next time.